Market Technicals Morning Call video for Wednesday, July 31st, last day of the month. We could get some window dressing, but more importantly, we have the FOMC meeting, which will be concluding at 2 o'clock p.m., and that looks like what the markets are waiting to hear and see what Ben Bernanke is going to say. We've been consolidating now for, I'd say, a good week and a half at the upper end of the range. So Ben Bernanke is really what this market needs to really spark this market to go either higher or lower. Now, I do think that Mr. Bernanke is not going to say anything to really rattle the markets, as he's at the tail end of his tenure, which I believe in January, December 31st will be his last day. So I think he's probably going to say good things about the market, speaking less hawkish, if not more dovish, and the markets rally from here and really take out the existing highs and really get into that 1710 area in the S&P, and that's very, very possible. So the markets have really been on hold to hear what he has to say, and that's what's probably going to happen today. We really had no movement. We had a little bit of movement, but really ended up flat on the day. Dow down $1, Nasdaq up 17, Apple had a decent day, S&P up 63 cents, and a Russell up $2.85. So you could clearly see the markets are really waiting on what Ben Bernanke is going to say. So what does that mean for us traders? Well, not to get in trouble, use your stops, be patient, and look for the best quality setups when we're in the middle of the summer and when the markets are waiting on a risk event. If there's nothing to do, cash is a position. Bottom line, there's always time to make money. Remember that. You don't have to trade every single day to make money and put money in your pocket for the end of the month. It's very important. Some traders are always trading every minute of the day, having to be in the market, and that's really a foolish game to play if you're really trading these markets, guys. Very, very important. I can't stress it enough. Anyway, I'm going to go into the markets here. There's not a lot to talk about, but I do want to point out one thing about the McClellan oscillator. We're down at negative 17. This is really neutral, as you can see here. We want to get either outside the bands on the upper end of the range to be overbought or down below to be oversold. So this here is just telling us the market's got plenty of room to run on both sides. That's the main reason why I just wanted to show that to you. Here is the dollar. Now, the dollar sparked up yesterday. The currency markets actually looks like they want to really take a big move, and they've been really quiet for the last, I'd say, last 2 months, more so. This first part of the year really hasn't been much of anything, but more so the last couple of months that have been trading in their respected ranges. Now, the dollar looks like it wants to pick up a little steam here. Now, believe it or not, whatever Ben Bernanke says today is going to really affect the dollar, gold, and, of course, equity. So I wouldn't put too much into this move up. We're going to need to see a little bit of more consolidation here and then take out yesterday's high to really start making a move higher, and then we would see commodities take a little hit, and also equities, at least for the moment. That's what the relationship is with equities and commodities and versus the dollar, okay? Let's go right into the charts, and I just want to show you, you can see what's going on here. We are just sitting at the upper end of the range, looking for some clues, looking for a catalyst to push us higher and take us well into that 1700 in the S&P cash. But you can see here, we're just sitting here looking for some sort of direction, and that's what we as traders have to identify. Okay, what's going on? Well, there's not much going on, so I should be trading much lighter, right, and looking for the best setups. Here's the diamonds. Same thing here, guys, with the diamonds. Really not much going on here. But again, that's going to change today. And also, don't forget, the non-farm payroll numbers come out tomorrow. So today and Friday, excuse me, not tomorrow, Friday, will be two big risk event days, okay? Here is that head and shoulders pattern that I showed you in the transportation sector, the IYT, which is the transportation sector ETF. And this here is only valid if it breaks this purple neckline, right? It could literally just take out the highs and go higher. So this is only valid if we take out this low here, which would be the neckline of 113.45, call it, if you will. And then you can see here we're starting to unwind that overbought reading in our stochastics and our MACDs. So the longer it just sits here and consolidates, the better off we are unwinding the overbought readings and then adding more fuel to the fire to the upside for an upside breakout. Okay. Here is the IWMs. Now, a couple other sectors that I've been watching are actually making bull flags. Now, we are in this range, as you can see, and this is really here. Okay, now we are in this range, but you can see we have the long flagpole and we have a flag. So we are flagging on the Russell, which to me looks healthy for another move higher. And you can see we're starting to unwind it overboard. Still overboard, no question about it. But we can move higher again. And don't forget, today is also the last day of the month. A lot of funds, they mark up their books or they defend their positions going into the next month. Okay, so that's something that you need to think about too as well. Here's another bull flag in Goldman Sachs. As you can see here, nice big long flagpole, and then we got the flag into the 20-day moving average. Now, does this bounce and take out the high? And this is what I'm going to be watching for Goldman today. Okay, and here's the ETF, same thing. Nice bull flag. You can see the flag here. Here's your flagpole. And so a lot of these, a lot of the key sectors actually just kind of slowly retraced lower, while the other sectors, the S&P and the Dow, has literally just consolidated on a horizontal channel. Okay, so this is all bullish, guys. There's nothing wrong with this at all. Now, again, if Bernanke says something to spark the markets, we can go either way. Okay, here's Apple. Apple looking really, really well. I tell you, this is good. This is a good sign. Here's the 200-day moving average. That's going to be your one target's going to be 470, and then your other target will be the 200-day moving average, which will come down every day to meet this area. So 470, probably 473 to 475 by the time it gets up there. Now, it could get up there today, actually, but we're doing okay with this. Now, to really look for some more momentum, the best area would be anywhere below this downtrend line, and your stops would be below that. Okay, so now, yeah, we are a bit away, but we want to see we want to see this come back down again. Give it a little bit of rest to see where we go from here. Do we break down, or do we just continue to go higher? But it looks like it's basing. Looks like we're getting one big base here. Okay, but again, Apple needs a lot more proving to do that it's done going down. All right, so let's just keep an eye on Apple. Again, if you're trading it for the day, it's not a problem. But if you're looking to build a position, I'd be building a position a little bit lower. And I think you get one more shot lower. Maybe not the 380 anymore, but at least the 390 to 400, or maybe 410, 415 area. But again, we need to see price start to move lower on low volume. And then the next pivotal low, I would be looking for a spot to buy into Apple. Okay, and lastly is the Qs. Now, NASDAQ was on fire yesterday. The Qs did a great job pushing up higher, partly due to NASDAQ, Apple. So if Apple can actually base as well, we can really get good momentum to the upside. I do think that there's going to be some fireworks here coming into August. I don't know which direction, but if anybody was to say anything, I would obviously say that I think the next move would be higher before lower. Now, again, that could change anything, a geopolitical event. Again, Bernanke, non-farm payrolls, they usually dictate going into the month of August, the first Friday of the month, and that usually kind of dictates the direction for the markets for that month. So let's just keep a good eye. Keep it light, guys. There's no reason to do anything today. A lot of traders do take off today. They don't trade the Fed. But I like to see, it gives me clues going into tomorrow and Friday. Have a great day. Use your stops, and we'll speak to you tomorrow. Take care.